All right, welcome back everybody. My name's Austin. I have an update for you regarding the people of Hong Kong who are right now rioting, protesting in the streets, fighting for their freedom, and in many cases their lives against the Chinese government. And this has been happening for the last 2-3 weeks. This isn't the update. In fact, for those of you who subscribe to this channel, then you know. We reported to you last week the sheer amount of volume that spiked up in Hong Kong, people buying and selling Bitcoins against the Hong Kong dollar. I have an update for you. The Hong Kong regulators responded. They put out some crypto regulation. So, like always, I want to find out how real is this confirmed, and update you on the sheer explosion we are seeing for the use case of Bitcoin. Because we found this information out a few days ago, Hong Kong ATMs are running out of money. People are afraid that the banks are going to freeze all their accounts, keep the money, so they're trying to pull them out as fast as they can. And because of that, they want to store their wealth. They want something that won't be devalued. Bitcoin trading volume is ballooning even more. And I did a little digging for you, and this is confirmed. We're getting pictures, we're getting tweets out of Hong Kong all within the last few days. We see lines around the block, people trying to withdraw their money before it's too late. We have additional confirmation from Kyle Bass, who is Chief Investment Officer at Heyman Capital Management. He confirms that yes, bank runs are happening all over Hong Kong right now. Yes, ATM machines are out of cash, but there is something more important. Because of the emergency regulation ordinance that was just invoked from their leader, Carrie Lam / the government can now officially confiscate bank accounts and assets without recourse. The Hong Kong legal system is essentially gone. I like this perspective. I appreciate this perspective. And I really do feel for the Hong Kong people right now. But there is a little bit of hope, and that's coming out of the non-sovereign, censorship-resistant, decentralized currency, which is Bitcoin. And this is confirmed right here, 22 hours ago, from a Hong Konger. Hong Konger here, ATMs are either trashed or queued up, but just used my last paycheck to buy more Bitcoin. And that really is the saving grace right now. And again, last week, to put this in perspective, last week, I'm going to try and zoom in, the week of September 28th, there was over $12 million in volume, people transacting Bitcoin, which is way higher than the bull run of 2017, 2018. There was more. And this was after 7 days. I want to update you today. And if we look right down here, the week has just begun, but already we're getting almost 3 million in volume, which is equivalent to what Hong Kong is used to seeing. And we still have almost 80% of the week to go. So we'll see. This is happening on localbitcoins.com. If you don't know what Local Bitcoins is, at localbitcoins.com, people from different countries can exchange their local currency to Bitcoins. The site allows users to post advertisements where they state exchange rates and payment methods for buying or selling Bitcoin. You reply to these advertisements and agree to meet with the person to buy Bitcoin with cash or trade Bitcoin with online banking. And the benefit to this really is peer-to-peer, person-to-person, which allows these Hong Kongers, to stay off the radar and use a currency that they can trust over the Chinese government who's trying to corrupt them. And maybe this is a coincidence right now, or maybe you don't believe in coincidences, but 3 days ago, on October 4th, Hong Kong's SFC, which is like the US's SEC, published new regulation for cryptocurrency fund managers. This is the update. Let me clue you in. Hong Kong's security regulator, the Securities and Futures Commission, so like a combination of the CFTC and SEC, has officially released regulations for crypto fund managers. The SFC published the regulatory circular on its website on October 4th. In a 37-page document titled Pro Forma Terms and Conditions for Licensed Corporations Which Manage Portfolios That Invest in Virtual Assets, quite the mouthful, The SFC provided terms and conditions for corporations and managing portfolios that invest in virtual assets. I have it right here. We're just going to clue you in on what does this mean to you? Why is this important to you? Well, according to the documentation, virtual asset fund managers, so the people handling the big bucks, the big cryptocurrency, fund managers in Hong Kong should always maintain liquid capital of a minimum of 3 million Hong Kong dollars. So this is a green light. It's pretty bullish. They're saying they have to hold a certain amount. And the SFC advised managers to have sufficient human and technical resources for proper performance, for better risk management, better compliance, as well as policies for anti-money laundering and combating the financing of terrorism. So nowhere in this does it say that cryptocurrency is not allowed, just basic specifications that you'd see from any regulatory committee. And I found this interesting because Hong Kong, by no means banning cryptocurrency, banning Bitcoin, it looks like they're just making it very clear this is what you need. If you're into cryptocurrency, by all means, just follow the regulation. And in this 37-page report, something to note is, I don't read this whole thing, but, I skimmed it. Nowhere in this document does it say Bitcoin at all. It only says cryptocurrency. So it looks like Hong Kong regulators are using Bitcoin and crypto to fight back a little. Let me know what you think down below in the comments, especially if you are part of our Hong Kong audience. Let the channel know how you're doing if this information checks out. As soon as I get more information regarding what this means for Bitcoin, what this means for you as a Bitcoin hodler, I will make a video. So hit subscribe. We drop a video every single day. You do not want to miss one. Next piece of news. This one's a big one. JPMorgan predicts the Fed to ease rates by October 31st, Halloween. This was a piece of that announcement, that news announcement from JPMorgan. In a direct quote, they said, "We believe the global economy has entered a second and more dangerous phase of slowing. Against this backdrop, we believe the emergence of more tangible signs that the U.S. growth has slowed will encourage the Fed to ease again at the end of this month." I appreciate this perspective and the reasoning that they're saying probably by October 31st, the dollar might be devalued even more. It's because of a few metrics that are now coming to light. There is slowing job growth is one indication of the slowing global economy. Also, at the end of last month, St. Louis Fed President James Bullard told CNBC's Closing Bell audience that yes, the Fed will cut interest rates again before the year's out. In his direct quote, he says, "We've made a big move, and I think we probably have a little bit more to go here." So definitely looks like before the year's out. JPMorgan is now officially going on the record saying it's going to happen before Halloween, October 31st. And yes, they are doing this to help the economy in the short term, but eventually there comes a point of diminishing returns. And hey, Bitcoin has a fixed supply. That's all I'll say. That's all I'll say. And last piece of news, I want to play you 60 seconds of this clip because a lot of you ask me, Austin, what's the best stablecoin that you can recommend? Because right now we have to use a stablecoin to cash out of Bitcoin, and fishiness of Tether. Although they are the biggest game in town, in my opinion, there are better stablecoins out there. Coinbase's stablecoin is good. Gemini's stablecoin is good. I want to give you another option. We've talked about this before, but this is from the CEO of MakerDAO, and this is the benefits of their stablecoin DAI.
Okay, well, there is a lot more emphasis and focus on stablecoins now, and this is partly thanks to Facebook's Libra initiative. But how many stablecoins does the world really need? There's Binance as well, there's Tether, there's now your coin. Are things getting a bit overpopulated?
I mean, there's a lot of stablecoins out there that are issued by companies, and I think because something like, if you look at Facebook's Libra, you look at Binance stablecoin, the thing about these stablecoins is that they're all issued by a particular brand, right? So they actually get adopted based on how people trust that particular brand. But that's because they're centralized, right? So the issue is that with a stablecoin like this, right, you have to trust that the company will actually hold your money safe for you. And what Maker is actually doing is trying to get beyond this model of just trusting some custodian and instead creating a stablecoin that actually maintains, the core value of blockchain by being decentralized. So rather than having a central authority, or rather having like reserves that are sitting in an account somewhere or sitting with a company somewhere, we have managed to make a system that maintains its stability purely through code, entirely on the blockchain. And this way, we offer an alternative that is a little bit more, less requiring of trust, right? And rather, it's about just working through the technology.
So, Rune.
All right. I like it. It's another option. You choose what's best for you. But that is the video for today. I'll let you go. Like always, I will see you tomorrow.